And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, November the 22nd. My name is John Hoagland. Thanks for trusting me with your time. Welcome to my futures family, friends, and fellow traders. It has been a quiet sort of day yesterday, probably looking maybe towards another quiet day today. We're going to take a good look on the market forecast and prepare for our trading day. Preparation is the enemy of inconsistency and impulse. Being prepared helps us be ready for anything that the markets offer us. Make sure you trade what you see. Stay patient. Think about context. And always first comes risk management, right? Well, we don't have any economic numbers out today. Those are all going to be tomorrow. We've got a long list of things to check out tomorrow. So today, really the focus is going to be on Fed speak. We have Loretta Meester speaking at 10 o'clock Central, 12:15 Central, Fed member George, and half an hour after that, Fed member Bullard, all scheduled to speak today. That's the only thing I see on the schedule. That we may expect some things to happen, but we just have to remember this is Thanksgiving week. Tomorrow will be the last day for any of the events here at Top Step. I'm suggesting everybody take Thursday and Friday off. There will be little participation, probably little opportunity. The thing about the low participation is you're going to have low liquidity too. If something does happen, you're on a bigger risk of having some big slippage on your stops. It's going to be a slippery couple of days if something goofy does happen. We can see already in the New York Stock Exchange and the volume in the S&P and the NASDAQ that traders are already kind of getting themselves hedged or positioned for a long weekend. A lot of low volume yesterday in New York, a lot of low volume in the S&P and the NASDAQ. The markets are kind of a little lack of confidence. We're going to see it in the charts very shortly. Stocks this morning appear ready to open, steady to higher, facing several talking Feds and awaiting tomorrow's data dump. Now, that data dump tomorrow, durable goods orders, jobless claims, which is usually on Thursdays, it's going to be on Wednesday. PMI composite flash, new home sales. Michigan consumer sentiment would usually be on Friday, but it's going to be on Wednesday tomorrow. The EIA petroleum status report, natural gas report, and the FOMC minutes. So tomorrow could be kind of a wild and crazy day, right? A lot of I think major players are already hedging so that they're going to be able to just kind of watch and not get too involved. Hopefully that's going to be the case. If they do have to get involved, I don't think it's necessarily going to be a good thing. Crude prices remain firm after the Saudis deny rumors of increased production. That was also joined by Kuwait, that also denied those rumors again of increased production. It seems COVID continues to, well, if you wouldn't, continues to plague China as cases surge again during continuation of current lockdowns. And there's the looming possibility of a rail strike here in the U.S. That, to me, can't happen. We have to make sure that the capillaries and arteries of the railroad in this country continue to run. Otherwise, we're going to be in even more trouble than we're already in as far as inflation is concerned. as well as getting the products that we need every day. It's going to be a very challenging period of time if the railroads do strike. So we're going to make sure that doesn't happen, I hope. VIX this morning was down slightly at 22.30, pretty low number there. Dollar index lower this morning, 107.41, and the yield on the 10-year, although higher than this time yesterday, is lower than it settled just a little bit. Current yield 3.8%. If you wouldn't mind, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel. You can get notified when we do go live. Looking forward to Make Hogue Money right after the forecast this morning. Let's see if we can't bring our knowledgeable trader and see if he can't make me some money. It's always interesting, always fun, and hopefully informative for everybody that watches. You're going to be able to watch it on our Zoom meeting or on YouTube. Always looking forward to those opportunities to spend a little more time with our traders, as our goal is your success. Good morning to everybody. Scott Saw, any conquered this morning. First in the room, you win the prize. Scott Shaw Cunningham, good morning. My brother Rick, love you. Jules Dimitar, Ted, Theo, Dark Heaven, Bill, JST Wave, Caprice, Denise, Dan, Naztic, Danny Ireland, Terry, Ron Merlot, you stay classy. Haggle Matters, Vince, good morning. Three Lions Inside, Diggable Seeker, Caesar, good morning. JM, Ips, Warrior Fan, what a week to start a combine, huh? Maybe a little slow for you, but just be patient. Wait for the opportunities to come to you, and keep your expectations manageable. You can still get closer to your target every day if you just manage the risk and look for the right opportunities. Mike Russell, good morning. Alan O'Neill, Ricardo, Rob T, good morning. Randall, Sarah Hall, prayers and love to you as well. Anissa Razmik, Marcelo, George, good morning, George. Lacey's over here on her bed, almost ready to start snoring. I think I bore her. Jan R., Alejandro, Jerry is awake. Wuhan Tourism Board, good morning. Mary and Columbus, good to see everybody this morning. And again, thanks for watching and thanks for spending some time with me. As always, we appreciate it. The Lazy Husband, that is also another one of my spirit animals. Started yours yesterday also. Well, that's all right. Just remember, it just takes a little more time. Just make good choices. Timothy Marks, good morning. Juan, good morning. So Tuesday, November 22nd, on a personal note, recently I don't know if you guys know or maybe you've heard that we lost our mom beginning of October, and today is her birthday. So happy birthday, Mom. Thought I'd start the charts with a little picture of my mom and me. Let's jump into the charts. Here's Mom. Lovely lady. That's me. That baby with the huge noggin. That's me. And happy birthday, Mom. All right, let's get down to business. All right. E-mini S&Ps. Here's the daily chart. Still, no real confidence in any of these daily bars. 1, 2, 3, 4, 5, 6, 7, 8 days. Well, today would be eighth day if we don't have much confidence in direction today. And what are we looking at? Well, I mean, we're looking at really short time frame control. We're right in the middle of last week's range. We're in the middle of the balance area that we've been in now for 7 days. Volume dropped yesterday on the New York Stock Exchange, and it also dropped in futures. So a lot of folks already signing off for the Thanksgiving holiday, or just waiting for tomorrow when this whole data dump comes in. I have no idea what's going to happen tomorrow with all that information coming out. It's going to be It's going to be an interesting day tomorrow. And they're all interesting days to one degree or another. There's always opportunity. It's just managing the context and looking for those right opportunities. So again, yesterday volume dropped, New York Stock Exchange and futures. Index volume dropped. We lost 1,200 in open interest yesterday. All right, well, maybe some folks are evening up for the long weekend. Range-bound rules apply. Okay, but we're in the middle of last week's range. We've got, some kind of candle bodies ending up here around 44,000. We've got some candle bodies ending down here around 39.58, 39.59. This is that area last week where we were kind of looking for a breakout below 39.61 to 51. We got our breakout, but it came back above that level, and it's been holding largely above that level most of the time ever since. So we're really kind of range-bound, short time frame controlled, no major increase in open interest or volume. Here we are. So we put up this little trend line here to kind of show the possibility of a bull flag. On the top line here, we have 1, 2, 3 points of contact, maybe even 4 points of contact. And now it looks as though we're breaking out to the upside. My question is going to be, does anybody really care? Is anybody watching? Well, it's looking like we're starting to watch a little bit here. So we're going to be opening with a gap above yesterday's regular trading hour session range. It starting to look like we're accumulating a little bit of overnight inventory to the long side. But this market can go anywhere between the 39.51. We've already been down to 45 today. Anywhere down to here, it can go anywhere up to here without changing really any market state. Yesterday we had a very range-bound day, kind of a quiet day, not a lot of opportunity. Today, yesterday we opened in range and in value from Friday. Today we're opening outside range and value. So the market does offer possibly an earlier opportunity. We'll take a look and see if we're going to do the opening range trade and make Hogue money. It's been, hasn't been that successful, but we'll take a look at it when we get there. But the market opening out of range, out of value, there is a visual target up here, 40.25. This naked volume point of control up here looms as a visual target. We don't really have much as far as visual targets down below without getting back into some serious history. So we're going to be opening with a range. With outside of range, we're going to be opening with a gap. Gap rules. If we can't close the gap relatively early, I understand that's a subjective term. That's going to be it's going to kind of create the opportunity for continuation to the upside. If this is proving to be a bull flag, then we've got some pretty decent space above with which to drive this market. Now it's kind of a tall order with the amount of participation that we saw yesterday, but you never know. We could see greater volume for it today. So I'm kind of looking at the opportunity in a range-bound market to find opportunities to buy weakness until proven wrong. What proves that wrong? It would be reacceptance inside yesterday's range, particularly yesterday's area of value. We've got to accept it down below 39.65 for us to really start to think that the upside is suffering, and we may see the value area special situation play bring price to low of value from yesterday, which puts us down to 39.51, which was one of those levels. Okay, 39.61 to 51 was really the area here we were looking at as potential support to stay in balance. We looked below it. Now we're kind of more back inside of it. So looking for opportunities to buy weakness in the S&Ps on the idea that this bull flag breakout will find some legs today. Crude oil. Yes, Alan, that was a few moons ago, right? So crude oil, obviously, we should be trading the January contract. Rollover ends yesterday and today. Our head and shoulders target was met yesterday on news that fundamentally we were going to get a little bit more supply of crude oil. That was denied and left us all of this excess down here. So this excess looks pretty daunting for continuation to the downside. We're going to start looking for opportunities to the upside today. I'm calling it ugly excess because it wasn't really technically created. It was created by news. Open interest dropped. Okay, overall we lost 21,000 contracts yesterday. 13,000 of them were in December. It was the expiring month. So technically we lost about 8,000 in open interest yesterday. Is that short covering? Did we get too short in the hole here as well as have that rumor denied? Take a look at the 30. All right, hey, we're going to get 500,000 more barrels. No, we're not. Cruel. We're opening with a gap. We've got overnight inventory to the short side. We've got point of control here, which we've kind of passed over in overnight. We still have this little gap here to fill in regular trading hours. We've got a naked point of control up here that it looks like we're trying to achieve right now. There's lots more visuals above, of course. Point being, most of those visuals are going to be and remain above price. This naked point of control here was checked. I've got to take that off. So most of our visuals, if traders are looking to move price towards visuals, are above price. Okay, gap fill. Maybe we're going to fill this previous gap and get a gap close to yesterday's high, which I think might be an interesting opportunity for us. I'm thinking we may find some fish on the gap close from from Thursday to Friday, and then from Monday to where we're going to open today. One of the caveats to upside continuation is if China comes out and says they are going to increase their lockdowns due to COVID. NASDAQ looks more like it has a downside hue to it, doesn't it? Does it represent a bull flag? We added 3,000 in open interest, 300 in open interest. So the open interest in the S&P and the NASDAQ largely just kind of inert. It doesn't really mean that much when it's this small. Tendency to sell rallies, I think, by looking at this daily chart, but caution. We got an overnight test of last week's low that has been rejected in overnight trade. Remember, overnight trade is very low volume. We don't have a lot of the participants that are available during the regular trading hours. Here's the 30-minute chart. So there's our test to last week's low, showing signs of rejection, back in range, now above value, but no gap. No gap. The NASDAQ is presenting as much weaker. Now, do we have a decent trend line off this high? If we were going to be looking for a breakout above a potential bull flag, we've got more work to do. Now, I'm not really seeing this as a bull flag. I'm seeing this more as a descending triangle. Similar but different than the E-mini S&P and the NASDAQ. So inside value area, stay patient. Inside range, stay patient. Overnight inventory may be starting to get a little bit to the long side, but also try and stay patient. Manage expectations in any of these markets today unless something really changes to drive these markets into a directional state. I'm looking for, yesterday's range in the S&Ps was 33 points. Is there a reason for it to expand greater than that today? Do you see one? Maybe one of the talking feds is going to say something. We have to, of course, wait and see. Here's gold. We lost 8,400 in open interest. Now, that's the estimate. It may be off a little bit, but it's not telling us that the auction to the downside is that healthy. It's weakening to the downside. Well, the dollar did go lower yesterday. We would think that might bring in more sellers, but it brought long liquidation, which does take selling power out of the marketplace. We've got an inside extended trading hours range so far. Okay, we are unraveling overnight inventory as we speak. I don't think that's going to be a major player for us this morning. Market tested to last week's high last night, kind of falling off of that. We still have a gap from Thursday to from Friday to Monday that remains unchecked. Excuse me, my goodness, a fuzzball or something here. I'll try a little coffee. Forgive me, I'm so sorry. I think I inhaled some dog hair or something. My goodness. So, back in range, back near value. I'm going to try and stay patient. You know, my opportunities, I think, are at last week's high in this gap close. And to the downside, kind of our weekly low this week, I think, is kind of interesting because this move to the downside did not bring in new buyers and new business. It took out old business. It took out some of the market's ability to continue to sell. Long liquidation. Here's the euro, which is a different situation. Now, in the euro, we added approximately 9,200 in open interest. Could that be right? You know, double checking. Yeah, we added 9,200. Now, that's the estimate, of course. We don't know 100% that it's that deep. But that tells us that traders were willing to continue to sell into this market. It's a healthier downside auction than we have in gold right now. Of course, all of this depends on the U.S. dollar. If the U.S. dollar starts to get some legs to the upside, the continuation will continue to the downside in the euro and in gold. If the dollar continues to waffle or continues to try and leak to the downside, we may see another change in direction here. So last week's low, again, resistant overnight. Here we are. Overnight inventory to the long side already largely reconciled. We did not open with a gap. We are kind of holding inside range from yesterday. We have a huge gap here. We've tested yesterday to this naked point of control. We've got more space to the downside to close that gap. I'm probably not going to be all that interested in trading the euro today, and I could be dead wrong. A lot of these markets are, kind of putting in my hypothesis to have lower expectations for big ranges, thinking we're going to, find ranges early in the session and largely stick to those. And I've been wrong before. The market loves to make a liar out of me. Loves to make a liar out of me. So the 10-year, what are we doing? We're short time frame controlled. We're range bound. We did have a pretty good jump in open interest, 55,000 contracts yesterday. What that's about, we'll take a look on the 30-minute chart and see if we can kind of prepare for that. But again, we're still in short time frame control. The market is hedging and positioning. The major players are just getting themselves positioned so they won't get hurt tomorrow before the long weekend and before the holiday in December. because they want to make sure they can get their kids the G.I. Joe with the Kung Fu grip. So, a lot of hedging, a lot of positioning. Where are we? We're in range, we're in value. Overnight inventory has been reconciled. No overnight inventory to lean on. Look at the value from Friday to Monday, same value. Inside that area of value, there's almost no change in the perception of value of the 10-year at this time. Stay patient. Overnight low, overnight high. Got a kind of a weak overnight high here. So I'm going to try and stay patient. I'm not going to probably be trading this market today, of course. Not seeing any real major moves. It doesn't mean there's not opportunity. It's just the opportunity is likely to be a little smaller. And for the natural gas, we should have moved to the January contract today. Looking at the volume this morning, the volume is greater in the January contract than the December, so I've changed everything to the January levels. Inside extended trading hour range so far. We have not yet filled the gap to the island top that we had on this day. There's about a 50-cent premium in January to the December contract if you want to adjust any of your levels. Last week's high supportive in the overnight. Find that to be kind of interesting. I think this is correct. Thursday, Friday, Monday. Yes, this is correct. So kind of hanging around last week's high. Here's what's left of the gap to the island top. In range. Overnight inventory, maybe a little bit to the short side, but nothing I would depend on. Stay patient. We're in range. You're gonna try and stay patient, as always. So important to do so. Right. All right. So we've got our task cut out for us. Sonny and Alan, a few moons ago, yes. Brody, sometimes I forget how much you've improved. Hey, Brody, it's my pleasure, and congratulations on getting funded. Very happy for you. Thank you, Fred. Rational Investors here. Good morning. It's good to see you. Good morning, Glitter Sandwich. Rational Investor, it's good to see you, buddy. Happy Thanksgiving, and hope things are going well for you and well for everybody. Hey, Joe, good to see you. All right, we are going to prepare for Make Hogue Money, so let's take our deep breath. Stay humble, grateful, and creative. I seem to have gotten rid of that fuzzball that I seem to have inhaled, so we're good to go. Stay patient today. Avoid looking for trades. Let the trades come to you. Let the trades come and find you. Again, keep your expectations reasonable. It's the day before our holiday weekend. It's the day before a major data dump tomorrow. So be prepared, be ready, and be patient. All right, I'm going to go get prepared for Make Hogue Money. I'll see you there in just about, 5-6 minutes. And make me some money. All right? If I don't see you, have a great trading day. Trade well, and maybe we'll see you for the Coach's Playbook or the recap at 3 o'clock today. We'll see you later. Have a great trading day.